Hello, everyone, and thank you for being with us in this 45 minutes to an hour presentation. I will do my best to make it informative, not to waste anybody's time. The idea is to learn, and hopefully this will be something unique, something new that I'll be able to convey. My name is Simon. I am the ATC Brokers Education Division provider. Before we start, let me go over the disclaimer. As you see, the content of this video is for educational purposes only and does not constitute financial advice. Investing carries a high risk of a high level of risk, and you should seek advice from a qualified financial advisor before making any decisions. The views expressed are those of the presenters, which is myself, Simon, and not necessarily those of their employer or affiliates. Just to introduce myself properly, I've been in the trading and educating business for forex, futures, and other instruments or other financial markets for about 20 years. I know ATC brokers for about 18 years now, and I'm really glad that I'm working with them because they have a unique way of approaching this business, which I could not find with other brokers. We can talk about it later. I can answer questions about it, but I'm really proud of doing this on behalf of ATC Broker or for ATC brokers at this time. Okay, now the basics. The basics are simple. What I'm trying to talk about today is the three unwritten rules of trading, and they are in simple words: to anticipate, to confirm, to execute. Anticipate, confirm, execute. So in short, it's the ACE methodology. Now the rules are simple, as I said, but they sound simple, but obviously they are hard to follow for most traders, and we'll go over that throughout the presentation. To do anything in life, whether it's a purchase or any kind of decision, any sort of decisions you're making, you have to analyze it. So basically you have to anticipate, analyze, starting from what to anticipate, then look for things that will confirm that decision. Anything you do in life, it carries these steps. Before you execute, you have to confirm, seek advice, seek confirmation for your decision, to affirm your decision. But before that, you have to look for that, to anticipate what you want, or to do your homework in regards to what you want. We follow this on our daily basis. However, when it comes to trading, I think most traders don't follow that, which is mind-boggling. I don't understand why. Confirmation is key. How to execute is key. However, to anticipate ahead of time is also key. It's a mental issue. It's a mental thing. It has nothing to do with, and it's a behavioral issue when it comes to trading. It has nothing to do with indicators or systems. A lot of systems could work if you can make them work, if you are patient enough, etc. But what I'm trying to accomplish in this webinar is try to help you understand my way of anticipating the markets before looking for confirmation and execution. Okay, so let's start. My main indicator that I'm using for anticipating the markets is called volume profile. So what is volume profile, and how to use it for analyzing the support, resistance, and continuation areas? Continuations areas are not looked at or not considered in trading in most cases. We will look at that and we will understand it. Let's look at an example. This is volume profile. On the right hand side, what you see here right in front of you this is what we call volume profile. You see the bellies, the valleys, the big bumps here, the bellies and the valleys. All right, different colors, different shades. See, all this we call volume profile. Let me before I start explaining, how it constructs. Let me give you an example. You noticed right at the bottom of the move here, the market reacted and moved back up. You see how this area is clearly showing low volume. And it's not only low volume here, it's low volume across the board all the way. Okay, and it's not something that happened just now, right? It happened before. So when this area was here, this was a rejection zone because of the low volume area. Let's look at it from the past. See? So even before that happened, there was a low volume level in that zone. You see? Let's see. Let's look. See? This whole area is low volume even before. So you anticipate there is a low volume. And keep in mind, just in short, markets don't like low volume. Price don't like low volume. And these areas considered to be ideal for rejections. Of course, that's support and resistance. So you see, and that's only one example, right? And if you are a Fibonacci trader, for example, you do your Fibonacci retracement from this low to this low and prepare for that. You see it was about 62% retracement already. And the market poked it and it did not like the idea, so just bounced back up. And if you look at other reversal areas, you will notice almost all of them are happening from levels that are different than the current level that they were in. For example, look at this here. There's low volume. Look at here. It bounced from the top of this area. So it's different. So there's a difference between this level and this level. And we will explain it more. Maybe now it sounds complicated. But let's look at how the volume profile constructs. Volume profile, this is a bar, a bid and ask ladder, or as well known as is known for supply and demand. Bid and ask, do you have two levels of two actually columns. One of them is for buying and the other one is for selling, as you see. This is a candle, by the way. So this is similar to, this candle is similar to this candle. Let me remove the Fibonacci. So this red candle here, okay, is similar to this candle, okay, and it has numbers. Now, for a normal person, even a genius person, it's hard to interpret or understand these numbers, right? It's high and low areas, and there's a lot of traders trying to understand it and commit trades according to these numbers. It's hard. It's not reasonable, but if you have an indicator that shows you the amount of volume and it makes it more visual, it will be easier. And I put volume profile on this chart, and let me bring it back up. It's hidden on the side, but it's very dynamic, so I can press Control plus. You can see it coming up. Okay, you see it's coming up. This is nicer. Now you see, and I can also sharpen the edges, and I can smoothen the edges too of it. So now this is a 1 hour of volume profile on the right hand side. See, and this tells me there was heavy volume in this area. You see it's orange and there's a bit of red here, so it means it was heavier here. So I don't need to read the numbers. I can tell, I can see it from here. There's high volume here, but it's lower than the top. There's orange, which is very similar to kind of this orange here. There's green, and there's very low volume area in this area here. Okay, so you get the idea. For example, this we call a continuation zone because it's almost one color, one size, as you see. Okay, here this is a one continuation zone. Of course, it's very small, but when you look at a bigger picture, you will see things differently. You will see things on a bigger scale. Okay, and you have the darkest area is here, which is red, and this what we call a point of control. So you have basically in this candle, you have high volume. The highest volume is point of control, and you have descending contracts here, descending, and all of a sudden you have a burst. But this area is very low. This area is very low, but this whole area in general is kind of low. And then you have this zone that is kind of similar. Okay, so you get the idea of how the volume constructs, right? How it happens. Now, let me bring more candles in. Now, this volume on the right-hand side is reading 2 candles. See? Now it's going to be reading more. Let me bring more. Now it's reading 3 candles. 1, 2, 3. Now the point of control between the 3 candles is not there anymore. It's here because it's reading the 3 candles. Once we start bringing more candles in, you don't need to see the numbers on the bars. You just see the volume. Okay. Of course, you can, if it's distracting, it's too big on the screen, you can just reduce it, as you see. Control minus, Control plus. You see it's getting bigger, and you can sharpen the edges. You can smoothen the edges according to your style of trading. Okay. Now the point of control obviously is changed to this area. So there's high volume area here. There's high volume area here as well. Okay. So now all of a sudden you don't need to see the numbers. You treat it as a bar, as a candlestick chart or any kind of chart. So now let's switch to an actual chart. Okay, right here. Again, nothing is random. Most of the rejections happen or continuations happen. If you don't have volume profile, you probably will wonder why. But once you have volume profile, for example, let me remove volume profile. Best thing, I removed it. That's it. I hid. It's hidden now. Now let me bring this is oil, XTI oil, and let's look at any low or any high. For example, it's easier to, let's say, rectangle. Let's look at this rejection. Let's see why this happened. Okay. Let me make it a little bit wider or a bit more obvious. Let's see why this happened. Let me bring volume profile to it, smoothen it. You see, there was a level of low volume the market was trying to escape lower, right? Trying to escape and hit this high volume node, which was the point of control, and trying to escape it, but all of a sudden low volume here. See, no interest. Now I'm not saying that you can trade all these. There are rules. There are besides the anticipation, there's confirmation. But I'm giving you an idea of why the market would reject certain areas while will continue in certain areas. As I said, there's nothing random. Everything is, if you see the volume behind it, you could kind of anticipate it and try and look for confirmations for trading in these areas. Look at this red area. See how many times the market went through it. It means it accumulated a lot of volume, right? If you look at all these highs here on top, you will see that the rejection happened simply because of, there was a difference between where the price was and where the price is trying to go. So rejection could be not only at a low volume, it could be from a color to a color, for example. So this color here is green. You see, this is green, and this is yellow. So there are 2 different levels of volume that are accumulated, and if you see the intersection between them, there are some rejections happening, while in between there's mostly continuation. Same thing with the red. See the red here? See how trying to escape it, and here at the bottom of it too. So if you have a volume profile indicator, it could give you a better idea of what to anticipate and where to look for better, in my opinion, for better trading, right? And you can use other instruments too, but volume profile, folks, to me is key. Let's look at the crude on a daily basis, on a daily chart, right? A lot of rejections. Of course, we have other indicators we will talk about, but a lot of rejections on a daily chart happen because of the volume. You could anticipate them because of volume. Now, the volume is an indication of what has happened in the past, and and it will show you where the market rejected, where the market continued, or the price rejected or price continued. But also it accumulates while you're looking at it. So, for example, if we go back to the initial candle with numbers, which is the bid and ask ladder, see, while the market is moving, while the price is moving, you will see the volume is, look at the volume. You see how the volume is accumulating? See, the candles change to green, see? And also you see that these areas are accumulating, see? Change to red, now it's green. So this area is kind of a do or die for the candle, which I don't care about the candle, whether it's red or green. I care about what has accumulated here. And you will see the numbers. See, it's increasing. See, the volume is increasing, right? So this thing is important, and this indicator is available with us. You can ask me later about it. It's available through ATC. But again, let's continue. So let's focus on the phrases, the two phrases for now. Let's go back to the 60-minute chart. Rejection zones versus continuation zones. Okay. Now, they look kind of not clear, but with practice, you will understand them better. You will know. So focusing on these two phrases, continuation and rejection zones. Let me give you an example of how do I look and how do I teach the methodology and how do I look at the market. Let's pick a typical common trading style, which is, let's say, Fibonacci. Everybody knows of Fibonacci, and let's say you have a downtrend. The market is going down, down, down. Now you're looking for a short because the market is going down. This simple example. Let's not complicate it. Some of the traders will look at a 38% retracement, which is here, for example. Some of the traders will look at 50% retracement, and some others would look at 62% retracement, etc. Right? Just an example. All right. Now the market retraces back up. The trader will take a trade just to get stopped out. Let's say they do 30 pip stop or 15 pip, whatever the case might be. Most traders don't even understand the risk behind the stops. They don't have a clear picture of where to put their stops, and this is something that we'll talk about today too. Volume profile will help you tremendously on how to pick the safest stops. Now, again, the market, the trader might think, let me get it at a 50%. So this is the 50% retracement. The market goes in. Probably the trader will jump in short. Market goes in your favor for 2, 3, 4, 5 pips, and then goes back up, stops you out. And then when it comes to 62% retracement, you would think, I got stopped out twice. I don't want to get stopped out. You let it go, and to your surprise, just goes up like this and comes back down. And you probably will chase it here at the very end, and then because it's a breakdown, you say, and it goes back up, you lose again. So you, as a trader, you had not anticipated the trade properly because you don't know. Not you, don't take anything personal. Like I might use different phrases, but you have not anticipated the market properly. First of all, looking at Fibonacci levels, for example, these are confirmations. This is not even to anticipate. Looking at the first few minutes of this video, 10-15 minutes of the video, you understand that volume profile will give you an idea of where the heavy volume lays, where the rejection zones are, and the continuation zone. So let's go back and practice the same thing with volume profile. So volume profile you had, and you put it on the chart, and it showed you something like this. You had a continuation zone above, and you had a continuation zone here. This whole thing is a continuation zone, as you see, and there was another continuation zone below. So this will be a continuation zone. Let's mark it as C, continuation, 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 and in between you have rejection R. You have rejection R. Of course, these are volume levels, but to simplify them, I put them as, you know, gaps. So market goes up. Of course, it got rejected, as you see, from this area, as you see. Market goes up. If you're not long, it goes up here. Automatically, you would think, no. Volume profile, this is a continuation zone, right? How can I get in? Now, even if you get in, where's your stop loss? Because this whole thing is a continuation, so you let it go. Second one, it's logical, it's okay, but, you know, it's still, why don't I wait for this level? So the market comes here to this level, right? And all of a sudden, you see the chance. This is your best rejection zone. Now, the best meaning, it doesn't mean you're going to win the trade, but at least it's safer. Why? Because now, at least if you take the trade from here, you know the next zone. Remember, we talked about different colors, different shades will create rejections. Different shapes will create different rejections. So this is a different color, different zone. So if the price goes into it, it's going to continue. So now you already know your stop loss. Your stop loss should be somewhere in this area where let's say the green line is, right? Because if we go into it more than a certain level, certain percentage, which I can explain in the future or different lessons, the price will go into it. So you'll have a bigger stop. So now you already limited your stop loss. So you know where your stop loss is, because you cannot put a stop loss where the burgundy line is, because that's too late, too much, because it's going to take it anyway, because it's another continuation zone. I hope you're getting the point, folks. And here, once you start shorting the market, for example, and that's an example, now you can manage to take first target and hold the runner, etc. But that's part of the management execution, as we say. Remember, it's three parts. It's anticipate, confirm, execute. Now, this level here, by the way, if I go back here, when the market hits this level, I don't recommend trading still, because this is only anticipating. Now we have the volume profile, etc., but we will have to use different indicators to give us more assurances. Remember, we are at the anticipation level now. We have not talked about confirmation. So here we should see some confirmation levels. Indicators to help us out. We have, you might have Fibonacci, it's good. You might have RSI, you might have your own ways of different indicators. If they match up here, then you're probably better. You're doing fine. So for now, we're talking about anticipate, confirmation. I'll talk to you about a couple of indicators. We have a few indicators, but we'll talk about a couple of them. And let's continue. Let's go back to the slide. First indicator for confirmation. Let's talk about confirmation. Confirmation is the artwork of gathering statistics that confirms or dismiss your trades on the anticipated levels. Remember this. It's not only to confirm, it's also to dismiss. Remember, it is important. It's as important to have indications of dismissing the trade as informations or confirmations to get into a trade. You get it? Safety is key. In my rules, safety is key, right? So let's look at first one that I like is power lines. This is my favorite indicator, and let's talk about it. Of course, again, you can use your own indicators besides volume profile, but this is one of my favorite, and let's cover it. Let me bring a chart. Okay. This is a 60-minute chart. Let's put the indicator on it. This is volume profile. I just added the power lines to it. Power lines, let me explain it. It says breach tick 2. It goes back 250 days. Let's make it simple. 250 days is okay. But so it goes back 250 days, and breach tick is 2. What do I mean by breach tick? You will see let me press OK. You will see the lines, right? Breach tick 2, meaning if the candle, these are support and resistance lines, by the way. If the candle, for example, this one, if it closes, it's still not closed yet, but if it closes 2 ticks above the line, the green line, this line, or 2 points above the line will disappear for it. And of course, the power line indicator, it gets created by the other indicator, which is called fractal indicator. Fractals are basically a formation of candles. So a fractal is, let me go back and draw the fractals. Let me show you what a fractal is. Let's say a high fractal, if you have a candlestick like this, or a high, this is a high, right? Followed on two sides. On each side, you have at least two candles that are closed lower. So this is lower. This is made lower highs. So if you have 2 or 3 lower highs on each side, minimum 2, then this will be a fractal. So there will be a dot here. So this is a top of a fractal. It will connect with the next top of a fractal, and it will create a line. These are very, very strong rejection zones or support zones, depending on they are above the price or below the price. So there is the fractal is what creates these. And of course, you don't see them here. If you go to the study, if you go to power lines, and if you go to graphs, and let's see, you increase, for example, I'm increasing the thickness of the fractal. You see, this is a fractal. You see the dot? This is the dot. So and of course I can do it for the lower ones too, but you understand the point. The point is very small. I mean, the dot is very small. But a fractal, a low fractal, for example, you have a low fractal here, this area. It had at least 2 lows that are higher than this low. So 1, 2, 1, 2. So that's a fractal, and it's connected with the previous fractal. It's created a line. So this line is a support now. Same thing with this. See here, you had a fractal. You had a fractal. It connected with this fractal, and it's created this line, which created a support here. So this support, in combination with this low volume area, was a good area for support, clear area for support. You get the point. So now, going back to the previous example, remember we talked about previous example. Let me just go back to the previous example of trading here, which I showed you right here. If this area had a fractal, for example, along a line, let's say I read like this, or a fractal or a double fractal like this, you would have extra confirmation. Now it looks busy, but of course I cannot help it. I mean, I have to explain it, right? So you get the idea. So if you have fractals, for example, let's go to a 987 tick chart. You see how the market got rejected along this line, rejected here. And you will see how the market got rejected here. Of course, we have other indicators that we could look at depending on the time. One of the things that you also have to understand that sometimes you will see a fractal here, this and this, but there's no line. As I explained, there's no line here because this here, the line here, was breached. So it goes away. I mean, there are candles closed above it by a certain point that you decide, right? Same thing with probably this one here. So there was supposed to be a line, but you see these candles negated, right? So that's the idea. See how this helped double, triple fractal or triple power lines helped this support. Again, if you remember, we did the Fibonacci on this one. Initially, we did a Fibonacci on this one. So there was a support level, I think here, from from this area to this area. So there was a Fibonacci retracement. So before you started this whole thing, you had a level that you anticipated the market to support from the Fibonacci level. This is 68%, and you probably could mark it if you put a line. And this is also one of the indicators, which also has an audio. If you can turn it on, we call this audio levels. So once the market came down to it, you see, then it rejected. So you could have anticipated this ahead of time, anticipated this whole area to be rejection, as you see, since we are still in a Fibonacci support area. For example, if you're a Fibonacci trader, then the market comes to it. Now you have not only the low volume area, you also have the fractals or the power lines to help you. Okay, let me see if we have something else, because we have other indicators. Let's go to this 60-minute chart, which is loaded with all the indicators that we have. So this area exactly not only had the low volume area and the power lines, but it also had this arrow. It also had these, we call them DRLs, dynamic reversal levels. Maybe they're covered now, but these are DRLs, dynamic reversal levels. This is other indicators that we use, which I don't think I'll have time to explain them today, but they are also powerful. And you have this arrow too, and the SAL indicator, which is the subject of the next confirmation indicators that we use. SAL indicator, substantial attraction levels. Okay, so we talked about power lines. SAL indicator, substantial attraction levels. What is it? Or substantial attraction level indicator. What is it, and how to use it for your confirmations? Now, this is not available anywhere else. Nothing. You cannot find this indicator anywhere else. I created this years ago, and it's only available with certain conditions. You have to have the good data feed, the proper data feed. You should have the proper platform, which is, to me, Sierra Chart, because I haven't seen any other platform that could read historic and current volume at the same time. Now, a lot of platforms out there, they say, yeah, we have market depth. This is beyond market depth, okay? Let me explain it to make it easier, okay? Substantial attraction level, SAL indicator, SAL. In trading, you have hidden volume, hidden or pending orders that you cannot see unless you have the proper platform, proper indicators that will extract those. So this SAL indicator is designed to read up to 50 levels, hidden levels of pending orders in the market. For the purpose of safety, I use 10, maximum 10. I use one for one chart, daily chart. I will need to see the biggest one, and then I use 10 on the smaller charts. So I only do 10 levels. I want to see hidden levels in the market. So if you have, let's say, pending orders in the market, and the price is, for example, somewhere, this is the market here, and you have pending orders. One of them is here. The other one is, for example, here, bigger, and the other one is smaller. And you have 10, an accumulation of 10. One of them is very big here, and one of them is below the market or where the market is here, etc. So you have 10 levels of hidden volume. And these are numbers, for example, 500 contracts, 600 contracts, whatever. These 10 levels could be spoofing. We don't know. They will attract the market. They will give some kind of action to the market. So this SAL indicator is useful because it adds some kind of a confirmation when the action happens. Okay, let me show you some charts. And of course, this is 10. So if I have only 10 levels, let's say, and all of a sudden this level here is the biggest one. All of a sudden, out of these 10, another institution puts, let's say, levels or contracts in the market that are bigger than the smallest one, which is this one here, the smallest one will disappear and the other one will show up. This will disappear because we're looking at only 10. So it restricts the number of contracts or the levels showing by the number that you choose. To be more clear, this is a chart. Let's see if we have a different chart. USD CAD. This is a USD CAD. This has, if I go to the studies, substantial attraction levels, I have 10 levels, 10 of attraction levels, and of course I can color code them in terms of color, in terms of heavy, which one is heavier. So the color, the darker, the heavier, as you see, right? So these are the levels that are hidden in the market currently. If I choose to do 5, so it will give me the heaviest 5. 1, 2, 3, 4, and there could be a 5 somewhere. Let me see. 1, 2, 3, 4. 5 could be here. Here's the 5th one. Okay, so the biggest one is right in this area. Okay, and I have 5. So if out of 5 there's an institution or a trader that comes in, and let's assume this is the smallest one right at the top. So if this is the smallest one, for example, and all of a sudden there was another institution that comes in that puts a hidden or a level, a pending order that is a bit bigger than this will disappear and the new one will, let's say, show up here, if it's here or if it's here, we don't know. So these levels are important. Sometimes when you are about to get in a trade, you will see them flashing around the price. So again, these are not levels that you should trade 100%. There are no guarantees, but they are useful in terms of confirmation. If you have a level that you're anticipating to trade, for example, if you're anticipating a level to trade, for example here, and you have flashing orders, you would expect there would be action. Again, this is not a trading, a standalone trading tool. This is to add confirmation. As you see, these levels are flashing, so there are orders coming in, and they just push the market. For example, here, an example for SPX, which is the ES, E-mini S&P, SPX, and the CFDs market. There was a level that showed up here. This is the biggest level that showed up earlier, and it acted like kind of rejection. I cannot trade it because I was not anticipating it. So I was not anticipating the market, but it rejected the market. So these levels are it's better for me to see them, to understand where the volume is and what are the institutional traders or what individual traders are doing. By seeing those flashing orders in front of me, it will help me. It could be distracting to you. You don't have to use it. It could be something that you're not benefiting from. You don't have to use it. But again, to me, I would rather see it and understand it. And if I can use it, why not? And this is US oil or XTI, the crude oil. If you see, I have 10 levels here. If I go to studies, substantial attraction levels, I have 10, right? 10. 10 of them, all 10 of them are lined up here. You see, lined up below the price. So all 10 of them are here. So we have a lot of heavy volume here. Actually, this heavy volume, this is one. On this chart, on a daily chart, I only do one for my own reasons. You could do one or two. Oh, not power line, sorry. Substantial attraction levels. I do only one. This was the biggest level of volume that was hidden here, and actually it participated in giving us some confirmation. I'm sorry about this. It participated in giving us some kind of confirmations to lifting the market up, as you see. Okay, so we had this power line from the daily. It helped tremendously for confirmation. See that? It was between this fractal and this fractal on the daily, and then it gave us this with this confirmation. So there's the importance. There lays the importance, or lies the importance of not only anticipating but confirming. right? And the other thing is knowing your stop loss. Remember, we talked about the next zone. For example, if you were planning to maybe, let's say, go to a smaller chart. If you were planning to go, let's say, trade this area long, you cannot have a stop loss all the way down, for example, here. I mean, this is not logical, because look at, if it goes into this, it's going to continue. This area, once you learn about volume profile, you would understand this area, these low volume areas do not hold a lot of price. Usually the market tries to either reject from the beginning, or the beginning of the next level, or it's going to continue. So this is from the experience, you will understand. So again, your stop loss would have been probably somewhere tighter, somewhere here, okay? And that's also important, because now you're not risking a lot. Safety is key, folks, in the way I teach this methodology. Now let's talk about other confirmations. Besides SAL, we have other indicators that we use. I showed you earlier. But the more indicators that you can use, of course, anticipating the market is key. That's the first thing you should be doing. Of course, to me, volume profile is key. So once I anticipate the market with volume profile, the more indicators I have to support my decision, right, the better it is. Fibonacci's, reversal signals, DRLs, you could have any other indicators that you have, as long as you don't use the indicators strictly for trading. You use them for confirmation, because you have to anticipate that area first. So anticipate, confirm, execute. 99% of traders I've seen, they are using the confirmation for trading. Confirmation alone is not enough, because that area, you don't know if it's going to hold or not. Maybe it held in the past. Maybe the market intending, or the volume accumulated now in a way that the market might consider it now as a continuation zone. Risk management. Always question your risk before committing to a trade. Execution with smart stops. Smart stops are key, as I mentioned. Once you learn the volume and the location of the volume, you will see it better. You'll understand where you should be putting your stops next, right? For example, let me do this. If I was, for example, again, if I was short, if I took a short in this area, right, I cannot have a stop loss somewhere higher, or it has to be tight. Why? Because we have the confirmation, as you see. You had the confirmations, which were the power lines, and you have the difference between this zone color and the previous zone. So if the market if the market goes into it, it might continue higher, right? So you can have a stop loss somewhere else, but your risk is higher. Okay. Same thing with whatever rejection happened here right now. Let me mark it with the line, if I have the line here established. No, I don't have, but you see this level here, the bottom, the most recent low. So the most recent low, it happened because of the low volume zone, as you see right here. Let me mark it. So this was a low volume zone area, and it rejected the market. So if you were planning to go long in this area, you should have had some confirmations. Could be, a SAL indicator that was popping at that time, or maybe a power line or something that maybe disappeared now. But regardless, you cannot have a stop loss, or you can, but you'll risk more if you have a stop loss all the way here. Because once the market goes into this area, right, it's going to continue down. So your stop loss has to be limited into the, limited. So once you get stopped out, you're limiting your risk. Limiting your losses is one of the most important habits in trading. And finally, let's see. Our mission to collaborate our mission is to collaborate with traders, sharing new knowledge and introducing a fresh market perspective while helping them eliminate counterproductive habits and address any conflicting educational backgrounds. A lot of traders come from different educational backgrounds, different subjects, different courses they took. When it comes to volume profile, you need to cleanse yourself, cleanse your mind, focus on it, and then add whatever you learned in the past. You will see a different way of trading. You will see it more clear. Okay, we firmly believe that understanding the significance of the value areas and volume dynamics is essential for accurately comprehending any markets. I usually get the typical questions when I do my webinars. Does ATC offer this education? Yes, just contact me, education@atcbrokers.com. How can I get the platform, which is Sierra Chart and the indicators? Again, contact me. Sierra Chart is a standalone platform, but I am so proud to see that we actually so Sierra Chart is a standalone platform, as you see right here, sierrachart.com. We were able to accommodate our data feed and offer Sierra Chart as a standalone platform. Now, the other question I get is, can I trade using Sierra Chart? Yes, you can, but and for the safety reason, we recommend that you continue trading or executing with your MT4. Just continue executing with your MT4. Sierra Chart, yes, you have that capability. Let me see. You have that capacity. As you see, you can execute trades from here, right? You can easily execute trades, buy and sell. But for the purpose of safety, we decided no, we can use Sierra Chart just for drawing or charting for our indicators for charting. But when it comes to execution, we highly recommend that you use your own MT4, which is safe. So we disabled direct execution from Sierra Chart. Again, it happened in the past, not only with multiple platforms where you take a trade on a platform and it's not in the server, and there was, this dispute happens, etc. So we eliminated that. We use Sierra Chart for charting only. And the other question is, do you offer trials? Yes, let me know. I could set you up with a 2-week trial with Sierra Chart on all my indicators, and of course I can give you also another face-to-face, but a direct instructions if you wish. You can approach me, but start with an email, education@atcbrokers.com. And finally, on behalf of myself and ATC Brokers, I thank you so much. Please stay in touch. This is the ATC Brokers platform. I also have a couple of YouTube channels that I created for the purpose of education. One of them is in English, as you see. It has a lot of information. We probably include it in the next email to you. And we have the Arabic side as well. I could do both educations in both languages, and I will be more than happy to answer all your questions. Just, this is Simon reach me at education@atcbrokers.com. All the best, and bye for now.